Good morning, Düsseldorf. It's a pleasure to be here. All right, I want you to picture this. You just wrapped up your quarter, and your cash flow forecast was totally off by 12%. Disastrous, right? And you can't blame strategy. It was not because of your market, but it was actually because of your system that didn't pick up on customer payment patterns. 12%, likely to cost you millions. Now, picture this. A system that learns, adapts, and kind of captures these errors and mistakes before they even happen in the first place. That's essentially the future of finance leadership, and it's what we call the neural CFO. I think that one isn't working just yet. All right. We are Payhawk. Please give us a chance to quickly introduce ourselves before we get started. I'm here with my dear colleague, Georgi Ivanov.
Good morning.
Georgi, formerly CFO, formerly Big Four, is now working at the forefront of finance and AI in finance, particularly. I myself am Felix. As you can see, I had Payhawk in the DACH region. Payhawk is essentially an expense management tool. That's more or less how we got started. But throughout the years, we evolved. And we evolved to a fully fledged CFO suite that particularly focus on spend management controls and AI agents. And I myself joined for one particular reason, and that's to strengthen our economic backbone, or contribute at least my part to it. And that's essentially helping mid-market enterprise to leverage AI to remain relevant and to remain competitive. All right, I want you to think about aviation. Most of us like it. Anyway, when the autopilot was first launched, we didn't fire all the pilots. They're still pilots, right? But what happened was we created trust. And we created trust not just in a tool, but kind of an entire system or ecosystem, landscape, whatever you want to call it, around it. We installed watchtowers, co-pilots, and checklists. And all of a sudden, there was trust, and all of that worked. And that's essentially where finance is now. We're at that intersection where AI is the autopilot, but actually nobody is asking us to leave our place in the cockpit. Nobody's asking finance, CFOs, controllers, and whatnot to leave. The job of the CFO now is to orchestrate in that cockpit systems, people, trust layers, and make us fly faster, more accurately, and with much more foresight than ever before. And now here's the very exciting part. We came up with a framework for all of that. Finance has kind of always evolved with technology. Starting off with the abacus, to double entry bookkeeping, and to eventually our beloved Excel spreadsheets. And now we're in the era of AI, right? And AI is not like NFT, it's actually here to stay. And if we dive into it a little more deeply, what we can see is that back in the day, you could say that we were historians. We were reporting about the past. Then we further evolved into analysts, where we were kind of trying to predict the future. And now we're something what we like to call the orchestrator, where we have to orchestrate within a IT landscape of agents and so on. And eventually, that's already taking place. And for the CFOs to leverage all of that, we can see, and that's 57%, we can see that they have ultimately much more time to actually take strategic decisions rather than, to distinguish fires. But where there's innovation, where there's change, there's always people being afraid of all of that and pushing back. There's rumors, and there's also myths, and we're here to bust a few myths before we introduce our framework. And a famous one is, AI is too risky for finance. AI will replace our jobs, but that's actually not the case. AI does the data entry, reporting, and so on. It does the tasks. But only you are the one to advise your CEO on what strategic moves to take, such as a merger or an acquisition. That's not going to go away. Here's another one. AI is too risky for finance. The reality is actually risk doesn't come from AI or naturally finance. It comes from bad governance. Bad governance means that something has not been installed to keep things in check. Now, how about we have a proper documentation, controls. Eventually, this will lead to auditors saying yes and not continuously no anymore, and that might speed things up after all.
And if I can intervene here, so you don't need to jump to autonomous AI in a day, so that the wins show up as soon as automate spend management and accounts payable. But now let's come to the framework. And of course, before we do that, the final myth is that AI is only for the big guys. Well, obviously that's not the case. The reality is that AI has been democratized, so now very good models are absolutely accessible, ubiquitous, and cheap. So the problem is not the technology. The moat is actually the governance. So you don't have an issue with lacking technology or even human capital, but governance in finance is the biggest moat. So going to the framework, the idea is to basically show you a really grounded, practical framework for how AI in finance evolves in complete and separate stages, without any hype, with some totally measurable and achievable results. So first, if there's one slide from today that you should remember, so make it this one. But first, the ground rules. So there are 5 stages. Each of these stages solves a specific problem. So we have a tagline. And then as we move along the stages, insight goes up, effort goes down, and speed goes almost real time. So let's now take it stage by stage, the way your month end actually feels. So the first stage is digitize, and it's the 0 stage. So the idea here is the acceptance that paper and screenshots are actually a tax on your talent. So basically, your goal here is to have at least 80% of inbound documents digital. So as soon as that happens, so two things basically materialize. First is your people stop typing, and then your data stops lying. It's like oxygen, right? Not very glamorous, but without it, nothing breathes. And as a matter of fact, nobody ever gets fired for scanning invoices, but without it, every AI model that you're using is actually guessing. So this essential 0 stage is important for us to prove that our data is usable already and as free of mistakes as possible. The second stage, so once we have at least 80% of our inbound documents digitized or digital, we can move to the automate stage. And the tagline here is cut the clicks. So what's important here is the number of manual touches. So how many manual touches we have, and the KPI that you can use is like, as a rule of thumb, below 20% of manual touches. So every percentage that you strip off is actually labor back to your team and fewer opportunities for error. And then, of course, we go to the third stage only after we've kind of reduced typing or manual labor. We can go to the augment stage. At this stage, so we have now the power of AI, which is humans plus predictive power. And this is all about now having insight, having real signal. So the KPI here is for us to have a mean absolute error below 4%. That is the error between your actual and the forecast, and the forecast. And then, of course, the anomaly alerts that you get from the system should have a precision of about 90%, because false positives or false alerts are another type of manual labor. And then as soon as we have like real-time, we have real-time insight and signal from the system, we can move to the advanced stage. So at this stage, we go close in real time, or almost real time. So the idea here is that your month-end closing starts to feel more like a rhythm and not like an event. So the traditional way of closing the month is like a big scramble every month. But as soon as we get to the advanced stage, after having achieved all the KPIs, the gates that we talked about, then your month end can start feel like a rhythm. So something that is predictable, stable, and always there for you. So what are the KPIs here? So the close, the target closing of your books is like less than 24 hours. I know that's quite ambitious, and currently it's almost unachievable, but we're talking about a future state. And then another important thing is drift, the model drift. That is how much a model's performance deteriorates, should be, less than 2%. So only after basically this happens, we go to the final stage, and that is, the target, the holy grail, the so-called autonomous finance. Something that has been brought up, has started to circulate in analyst reports, and companies like Gartner and others, and now we're talking about autonomous finance, and expectations are that the first autonomous finance systems will have towards like 2030, in 5 or 6 years. We also call that self-optimizing finance, because the leap from advance, from the previous stage, is qualitative. So here we have almost a system that is run by multiple agents. So all your routine functions in the department are run by bounded, safe agents working in policy and in bounds. So they work in synchronicity. And all routine transactions, routine postings are done by agents, so that when we say autonomous, so people think hands off, right? But that's not the right way to say that. That's not the right. It's hands-on the right things while agents, do the rest. So people and finance teams are now more like exception managers, decision makers, focusing on strategy rather than, doing manual work, typing, or routine operations. So the KPI here, the hard KPI, is STP, which is straight-through processing, and that is a workflow that goes end-to-end without any manual touch, without manual intervention. So we have STP above 99%, which is combined with real-time liquidity, so that at any time at any point in time, you have a real visibility of your liquidity, and agents can actually release payments and learn based on all the inputs. So it is self-optimizing stage. So it's not only action, but it's also continuous adaptation and learning. So that's the difference. And then at the bottom, you can see the agent archetypes. So at each stage, we have an agent archetype or type of agents, which we'll look in a minute, which basically do whatever we are supposed to do at this stage. But to sum up, so the columns, the stages, basically show you what we earn, and the agents, how the work runs, how it gets done. So the agent archetype, so of course this is a way that you can look at agentic AI in finance. First and foremost, so what is an agent? Because that is quite debatable, right? So, and an agent is not a bot. So an agent is a software teammate that takes a go, then perceives, reads the context, checks the rules, uses some tools to achieve that goal, and then leaves a complete audit trail of what it did and why. So in our case, and you're going to see that later in the stack, and remember, this is a presentation for non-technical people, so I myself am non-technical, so trying to explain a bit of a technical information for non-technical, for finance people. So in our tech stack, the LLM, or the language model, is kept separate, so it's doing all the language work, the analysis, the interpretation, the routing, and so on. And everything else is kept in the core engine, in the core deterministic engine, which is our ERP or GL. That is where the math and the state lives, the governed calculators. So we keep that separate. So the first type and the first stage, actually it's stage 1, because remember at stage 0, the digitized, we don't use any agents, any bots. But in stage 1, we use the lookup agent and lookup bot even. So it does not even meet all the criteria for an agent because it does not make decisions, but still we classify it in this framework because we want to impose exactly the same controls that all the other agents have. So the lookup agent, it doesn't decide. It just prepares the work for you. So it parses information, it enriches, it matches, and then serves it up clean for you to approve, or for a person still clicks here. A person still, does some work. So what the controls here in the first place are lineage. And lineage, that is the traceability, where each and every figure or action can be traced down to its source, and confidence, how confident the system is that what it's doing, is right. So as soon as this lookup bots or agents actually push down the manual touches below 20%, then we're ready to go to the next stage. And at the next stage, we have action agents, also human in the loop. So here the difference is that they not only prepare, but they also propose. So they make a suggestion, already some kind of decision. That's why they are now a true agent, unlike the lookup bots. So they can propose accrual entries, flag anomalies, do forecast reconciliations or other reconciliations. And in this case, in this stage, so the controls are, in the first place, the model, the AI model, the model cards that we should keep always up to date. And this model card shows what the model is doing, who's the owner, what the limitations are. And then the approval trails. So who did what and why. You remember, in order to basically, the gate here to go to the next stage is then when we kind of manage to forecast or to do anything with the mean absolute error below 4%, and the anomaly precision alerts are, the anomaly alerts are precise above 90%. And then we leap to, and we go to autonomous agents, but bounded. So, and here, that is only at this stage, we have real autonomy, but within narrow, safe lanes. So the agents here, they can actually do now real action without any intervention, like posting routine journal entries, raising purchase orders, they're purchasing items, or like if it's a travel agent, out to booking a flight, creating an expense report, attaching all the documents to this report, and so on. And you're seeing that across these, so these are four levels of capability that we're showing of the agents. And now the controls are even harder. So at every stage, the controls become stricter, stronger, and harder. So here, the controls are, in the first place, segregation of duties. Remember that important rule in finance. Role-based access. So these basically what? They guarantee that nobody can basically request, approve, and pay. No one, so no identity. It must be split. There must be segregation duties. And finally, agent orchestration is at the autonomous finance stage, so multiple agents. So it's not about a single agent anymore, but multiple agents, bounded, working in synchronicity. Controls are even, end-to-end provenance, so everything is traced end-to-end. System telemetry, so we know the controls and we have visibility into everything that is going on in the system. And now I will give example of how these four archetypes can be enabled or implemented through four Payhawk agents. So these are real agents that Payhawk has developed. So the financial controller, procurement, travel, and payments. So at each stage, they have different rights or different capabilities. Let's take, if we take the financial controller agent at the lookup stage, it only checks statuses, right? Taking receipts or invoices, parsing, and matching to transactions. Let's say a receipt matched to card transactions. That's That's what it can do. Then at the action stage, then it doesn't only do that, but it sends, it prepares, it proposes, or it chases, let's say, non-compliant spend or missing receipts. The same information and in a different format, but I'm conscious of the time, so would like to say a few words about how autonomy stays safe. So the trust layer. Remember when we looked at the framework, and at the floor we have a trust layer that is by design. So it's the foundation. Unified truth. So that is one governed data lake, a single spreadsheet in the sky. Then explainability. So all your models, being using model cards, bias scans, and everything comes with explanation. And finally, continuous assurance. So that is all the drift monitors, all the controls and the telemetry, and of course, kill switches. Architecture, that's also the next question a CFO would ask. So it's important to know that the architecture is split, and that's the most important thing. So we have LLMs for fluency at the edge, deterministic core, and that is our GL or our ERP, and validation and guards in between. And of course, channels are Slack or Teams, the way that people interface and interact with the agents. And how this an example transaction going through all the steps. So when an invoice comes in, it is split into structured fields. Then the LLM that acts as an orchestrator parses the fields, drafts coding, explains policy, and prepares a suggestion and routing for approval. Then this goes through checks in the governed calculator. So policy test, invariance, always invariance. So the fundamental laws of accounting, invariance, debits equals credits, or assets equal liabilities plus equity, always checked against such, invariance. Then decision for posting, whether a human does it or how to post it. Then hitting the general ledger, and finally evidence. And one important thing, and my favorite key takeaway, why LLMs are not finance brains. So as clever as they are in world models. So they don't reason about time. They don't know, the rules. They can do like impossible things, like moving a chess figure on the board that wasn't there. And at the same time, finance is a world model. So it's ledgers, it's 2 + 2 always equals 4, and so on. So we never leave LLMs to do things directly, to move cash, to post journal entries, to change mappings, and so on. So the rule is keep separate the LLM than the deterministic core, that is the governed calculators, and the controls. This is the stack.
All right. So before we wrap up, let's take the chance and let's fast forward to 2030. So what's finance leadership going to look like in 2030 after we heard all of that? Well, it's definitely not going to look like a bunch of dashboards. It'll be more like a cockpit. And within that cockpit, you're the one to orchestrate. And that finance control plane, as we call it, essentially consists of agents. And what that means is you're not going to click around in the dashboards I just mentioned. You work with intent. Working with intent essentially means you say what you need to do, and you guys know the drill from ChatGPT. So you say what you need to do, and the agent executes for you. So it's like ChatGPT, just more actionable. And what's going to happen is that you will break down the IT infrastructure silos in procurement, travel, spend, controlling, and so on, right? And eventually, that's going to make you more accurate, faster, and a lot safer when it comes down to that. And the good news is it's being developed right now. We're launching it this month, as mentioned beforehand. We have controls in place. What happens to the human? They stay in command. They run scenarios. They make exceptions. And eventually, they get to still take the decisions. So eventually, your job is not just, controversially speaking, to close the books, but to actually open up the future. And the very good CFOs of the future are not just good accountants. They're the one to orchestrate this very landscape. And if we get this one right, we in finance won't be the naysayers anymore. We're actually going to be the ones to ask, what's next? Thank you. That's essentially it. With an eye on the time, we have a stand over there. We got a masterclass at 11:30, and we'd love to discuss these topics with you, and we'll see you later. Thank you.
Thank you very much. I'm behind you. Hello. Stay with me on the stage. There are a few questions for you. Are you ready for it?
Yeah.
All right. Someone asked, why should CFOs lead this, not CIOs or CTOs? Who wants?
Well, yeah, this is a very good question, by the way, and I often hear that. So why this was like technology, tech speak. Why should like CFOs have to do that? But in AI, it's different, and I'm always reminding people that AI implementation is not a business challenge.
Okay.
Is not a technical challenge, is a business challenge. And this basically refers to the core deterministic engine of finance, that is the GL, and the CFO is the owner of that. So he's the one who needs to become the orchestrator, as Felix said, and to arrange and orchestrate the people, the processes, and the systems so that they deliver value. So it's not of course this happens in partnership with the CTO, but it's a CFO job.
All right, then I think we have time for another last question. How is your system connected to my existing environment?
How?
How is my system connected to my existing environment?
How is your system connected?
Genau.
Okay, so yeah, well, if the question is about Payhawk's system,
I think so.
It is. We are connected in real time through APIs to most ERP system, so that we have event-driven data. It's live. So that is one of the key strengths of Payhawk, are these integrations with all major ERP systems. So that is one of the rules that we mention in the framework.
So thank you. Unfortunately, we are running out of time, but you're welcome to ask your questions in person. But first, let's hear it for Felix, Brückner, and Georgi, Ivanov. Thank you very much.